Hi, I'm Michael and welcome to Michael's Matters. And as we get closer and closer to that dreaded deadline in April for this year's tax filing due date, folks are gathering up their forms trying to figure out how much money they had contributed to this and how much distributions they took from that. And basically every transaction that you had throughout the year of any reasonable size has a form of some sort that goes with it. Now, if you had health insurance for 2021, though, through a health exchange like Healthcare.gov or Covered California here in California, then you got a 1095A form. This form is pretty important because it shows who was in your household, who had coverage, and how much help you actually got to pay for your health plan. Now, the real important form, though, is the form 8962, because this is a form that'll tell you whether or not you actually owe money back to the tax man, or if you should be getting a bigger tax return from the amount of subsidy that you got on your health insurance plan. So today, we are doing a brief run through of what is the form 8962 and how to fill it out if you have your 1095A form. Now, this is Michael's Matters, and before we get to it, if you like this information, if you find it interesting, if you find it helpful, if you find it useful, please don't forget to like and subscribe. That way you can get updates when our newest and most informative videos become available. Now, okay, so before we do the walkthrough, let's talk about this Form 8962, who needs to fill it out, and why you need to fill it out, and what are some of the specific 2021 changes for the form. Form 8962 is the form that you need to justify the amount of monthly premium assistance that you received during the year for your health insurance plan, called Advanced Premium Tax Credit, or APTC. This is going to be versus how much money you actually made. This is necessary because the health exchange calculates how much your health insurance plan cost is based on your estimated income for 2021 when we renewed it in November of 2020. Now, I don't know about you, but if you can estimate your income for December 2021 back from November 2020, then you might just be a genius. But as a result, if your income was actually lower or higher than you had estimated in November of that year, then you may be entitled to get more money back on your return, that is, if it's lower, or you have to pay some of that money back if your income was actually higher at the end of the year. The 8962 form is the form that shows you how much you actually have to pay back or how much you get back. This form is only for people who had health insurance through a health exchange. It is not needed if you had health coverage through Medicare, through the VA, through your work, or through Medicaid or Medi-Cal if you're here in California. Only if you had private health insurance that was subsidized through a health exchange. Unique to 2021, though, was a rule that put in place by the pandemic assistance legislation that happened in that year that said that if you had received 1 month of unemployment benefits, so just 1 month, no matter what your income was for the year, you would be considered eligible for the highest amount of premium assistance. Or in real world terms, that would mean that the cost for your health insurance plan would usually be either $1 or $0, depending on the state that you live in. So if you had health insurance through an exchange in 2021 and received help paying for your plan, then let's talk about how to fill out your Form 8962. All right, so let's do this walkthrough, and we're going to do it right by the numbers line by line, okay? So we're going to start off with the first line, which is line number 1. And line number 1 should be the easiest one to do, which is to put in your name. So in this case, we're going to have our fictitious person, Johnny Taxpayer. Line number 2 should be the second easiest question on here, which is for your Social Security number. Johnny Taxpayer, his Social Security number is going to be 11111. All right, so for letter A, it says if you or a spouse are filing a joint return or receiving or approved to receive unemployment compensation for any week during 2021, check this box. I did not, but just as a reminder, this is one of those situations where if you did have unemployment and you check the box, then you were going to get the maximum allowed APTC for your plan. So that's pretty good if you had it, but if you didn't, like me, I didn't, then you don't need to check it. Let's do number B. You cannot take PTC if your filing status is married, file it separately unless you qualify for exceptions. I am not married, filed separately, so I'm going to leave those two blank. All right, so let's get to part 1 here, line 1, which is tax family size. So it's just me, so I'm going to put in not a 10. Ooh, I'll put a 1 there. And then the modified adjusted gross income is going to be, for me, $30,000. Now, The modified adjusted gross income is something a little tricky. There is a little chart here that you can use to help to figure it out, because it includes things that are not normally taxed as income for the calculation of PTC. So things like Social Security benefits and other things that, again, don't really get fully taxed, but maybe are going to be included in there. In my case, I don't have any of that, just straight income. In this example, we'll put $30,000. Number 2B is enter the total of dependents modified adjusted gross income. I don't have any dependents, so I'm going to leave this one blank. Number 3, household income. Add the amounts of 2A and 2B together. That puts me at $30,000. All right, so for number 4, or for line 4, this is going to ask me to define what region of the United States I live in, because it's going to change the FPL calculation, the federal poverty level that I'm in. So if you live in Alaska, you can click box A. If you live in Hawaii, you can click box B. And for most of us who live in the rest of the country, it's going to be box C for 48 states and Washington, D.C. Now, furthermore, when you go on to the instructions, there is a chart with the FPLs that you would need to include as a dollar amount on there for line number 4. So in this case, it's $12,760, which I need to put onto line 4. And then for line 5, this is where things get a little tricky, because you need to figure out what is your actual FPL level. And you can use those numbers from line 4 and from line 12 and line 3, from line 4 and line 3 to figure it out. So you take the amount from line 3, which is $30,000, and then you divide it by the amount from line 4, which is $12,760, and multiply that by 100 to get you the percentage, which is 235%. So my $30,000 worth of income in this case is at 235% of the federal poverty level for folks who live in the contiguous United States. All right, number 6. This is reserved for future usage, so whatever that's going to be for. Let's go to line number 7. Now, line number 7 is going to be your applicable percentages. So there's a table here in the instructions for the 8962 where I need to go and find my FPL, which are these numbers here. So I look at 235, and that means I need to put this number, 0.0340, into line number 7. So 0.0340, that goes there. And then for line 8A, let's see here. I need to multiply line number 3, so that 30,000, by line number 7, which is the 0.0340. So that is 30,000 times 0.0340, and that gives me $1,020, which is presumably the amount of APTC or PTC that I should have received throughout the year. So then it's asked me to divide 8A, that 1,020, by 12 to give me a monthly amount, which is $85. And so we have completed part 1, which is basically just your basic information. All right, so part 2, line number 9. Are you allocating policy amounts with another taxpayer, or do you want to use alternative calculations for year of marriage? So this would be if you have a situation where you have, I guess you got married within the year, or you have multiple tax accounts that you're doing together. I don't have that situation, so I'll put no. And then line number 10 is see your instructions determine if you can use line 11 or complete line 12 through 23. So in this situation, they are asking if on your 1095A, if you had the same amount of numbers, you had the same coverage every month throughout the year, in which case you can just use the total annual amount, or if you had differing amounts throughout the year, say your income went up or your household size changed and you got different amounts throughout the year, then you would need to click no and use these lines 12 through 23 and manually put them in month by month. Such in this case, I do have a 1095A that shows the exact same amount yearly. I will click yes to this one, and then I can just use the annual amounts on line 11. All right, so let's get to the notes for line 11. So 11A is asking for the annual amount of premiums from line 33A on my 1095A. Okay, so let's go back to the 1095A, and line 33 right here for the 1095A is $5,529. Line 11B is going to be for the second lowest cost silver plan premium, which in this case is $4,981.32. So that is for line 33B on my 1095A. And then the annual contribution amount, which we got from 8A here, this $1,020. Now, 11D is the annual maximum premium assistance. So subtract C, $1,020, from B, $4,981.32, and let's see what we get here. So subtract C, so 4,981.32 minus 1,020 gives you $3,961.32. Now the annual premium tax credit lower, smaller of A allowed. So a smaller of A or D. So A is 5,529, D is 3,961.32. So we're going to put in $3,961.32. Now lastly, for 11F, it's asking for on the 1095A line 33C, which is $4,203. You can see that over here, $4,203.60. So now we have completed 11 section or line 11. So now we get to the fun part where we get to figure out whether I am going to owe money back or not. So we don't need to do 12 through 23 again because we had the same amounts yearly, so we could use the annual amounts to do the calculations. So line 24, the total premium tax credit, enter the amount from a line 11E, the $3,961.32, or the amounts for 12 through 23, which we did not do. And then for line 25, the advance payment of PTC, enter the amount from a line 11F, which is $4,203.60. So then we get to line 26, the net premium tax credit. If line 24 is greater than line 25, subtract line 25 from line 24. Enter the difference here on Schedule 3, 1040, line 9. If line 24 equals line 25, enter 0. Stop here. If line 25 is greater than line 24, which it is, then leave this one blank and go to 27, which is going to be the sin bin. This is where you find out how much you got to pay back. So line 27, the excess advance PTC. If line 25 is greater than line 24, subtract line 24 from line 25. So 4,203.60 minus 3,961.32. That leaves me with $242.28. Now, line 28, there are repayment limitations. So if you have a certain FPL, then there's a limit to how much you could have to pay back. In this case, if we look at the chart on the instructions, it has the amount for people who have at least 200, the FPL that's at least 200%, but less than 300%, where the maximum amount is going to be $800 for a single person. So we'll put that here, and since $800 is more than $242.28, then it's either the smaller of line 27 or line 28. So that is $242.28. So in this situation, again, because the amount that I had estimated in this situation for my Covered California plan was at $28,000. That's how much I thought my income would be in November of 2020 when I applied. But the reality is that at the end of the year, I actually made $30,000. So what this is telling me on line 29 is that the difference amount of APTC that I got throughout the year, so I should have gotten less APTC throughout the year, and I'm basically having to pay back the excess amount that I got, which comes out to $242.28. So not too bad, but it does end up being a lot, especially in the case where somebody has, they had a family member who left a tax household, or maybe someone got a life insurance settlement, or you sold your house and you had this big influx of income at one point throughout the year, and you didn't update the exchange, then you could possibly have $10,000, $5,000 you have to pay back. And although it's not necessarily paying back money, it's money that you were going to be charged either way. So ultimately it's the same amount of money at the end of the year, however you slice it. It does kind of hurt a little bit more when you have to pay it back at the end of the year, instead of me putting maybe my income at a higher amount, maybe at $32,000, and then I put my income at $30,000, and then they maybe have to pay me back $242. So that's how you fill out that 8962 form. I hope that helps you out. In this case, I had to pay some money back, so it's not too much, luckily, but still kind of sucks. All right, so that is how you fill out Form 8962. And I think this is one of the most frustrating forms for folks to try to figure out, because the numbers may not always come up just right. The reason being is that the inherent flaw with how the exchanges are set up. They're designed for us to estimate at the beginning of the year what we think our income will be by the end of the year. And especially over the last few years, that is pretty crazy hard to do. Lots and lots and lots of people are really going to be bound to over or underestimate their incomes because all of the weird, crazy, dramatic shifts in employment that we've had over these last few years. It is just easy to see how you can end up pulling your hair out, trying to figure out why you may owe some money back, but can't try to figure out why. Many times, at least for this 8962 form, is because the income estimation for the year was off, and really all you can do is pay what you owe back and try to get a better estimation for the next year. The other thing you can do is always overestimate your income, well, just a little bit. That way at the end of the year, instead of having to pay back like this $242.28 in the sample that we just did to the IRS will take it off your taxes and you'll get a $242.28 bigger tax return. So that's it for today's For Michael's Matters, and I hope that you found it interesting or helpful or at least useful. And if you did, please don't forget to like and subscribe. That way you can get updates when our newest and most informative videos become available. So for Michael's Matters, I'm Michael, hoping that you take care of others, take care of yourself, and have a happy, healthy day.